In this video, we will examine whether XCN Coin can be $1. Let's look at where the price can go in the short term before asking the question, will XCN be $1? Please watch until the end so you don't miss anything. When we look at the chart of XCN Coin, a strong falling trend line coming from the top is noticeable. The price has moved under the pressure of this trend for a while. If this trend is broken, a strong upward movement may start. Downtrends usually represent selling pressure in the market, causing the price to make consistently lower highs. However, breaking such strong downtrends to the upside usually increases investor interest and brings new buyers into the market, and should retest after breaking the downtrend. There's a rising trend line coming up from the bottom. The price touches this trend line and moves upwards on the reactions it receives from it. Such uptrends indicate that the market is under buyer pressure and the price is gaining upward momentum. Usually, every time the price touches the trend line, it finds support and moves up again. This indicates that traders see this level as a strong support and buy. If this trend is maintained, it will make new highs on an uptrend. Looking at the chart, there is a strong bullish order block at the bottom. This area stands out as an area where the price has previously received strong buyer reaction and moved upwards. Bullish order blocks are often known as areas where large investors buy and cause the price to move higher. Each time the price comes to this area, it can act as a support point and react upwards again. So, when the price approaches this level, we can see buyers step in and offset the selling pressure. If this zone is strongly held, the price may bounce upwards again from here. And there is a bearish order block at the top. This is an area where the price had previously encountered heavy selling pressure and turned bearish. Bearish order blocks are usually known as areas where large investors sell and cause the price to move downwards. When the price approaches this area, there's a good chance that sellers will step in. This is why it can work like an area of resistance, and the price may struggle here. It may not break here the first time, but it may break it after a few attempts. According to Elliott wave theory, after the first and second waves are completed, the third wave is usually the strongest and longest. In technical analysis, we use Fibonacci expansion levels to determine the target of the third wave. In this context, at least the Fibonacci level of 1,618 should be targeted for the third wave. That is, the price action usually rises 1,618 times the length of the first wave. And the third wave is a fast wave that comes suddenly when expectations are falling. Looking at the chart from a broader perspective, we can clearly see that a flag pattern has formed. This pattern is often recognized as a structure that indicates the continuation of a strong trend. A flag pattern is characterized by a consolidation zone that forms after a steep rise. After the price has been stuck inside this flag for a while, it usually breaks out in the direction of the trend. To determine the target of the pattern, we first measure the flag's pole length. Then, this measurement is added to the upper limit of the flag to calculate the potential bullish target. If the price breaks the flag pattern to the upside, a move of the length of the pole can be expected. On the chart, we clearly see an ascending channel structure. Such channels indicate that the price is fluctuating between certain support and resistance levels, and the trend is generally upwards. Looking at the recent price action, there was first a touch of the middle band of the channel, followed by a pullback towards the lower band. Such movements usually create regular fluctuations inside the channel, and the price moves within this structure for a while. If it tries the middle band again, it will be easier to break it because it tried there once. When we look at the Bollinger Bands, we can clearly see that there is a squeeze in the price action. Such band squeezes are usually a precursor to a big move. As the bands narrow, volatility decreases, and the market prepares to set a direction. Whichever way the price breaks out will be a big breakout as volatility is large. When we look at the MACD indicator, a top-to-bottom crossover occurred first, and the price declined as a result. This is usually a sign that momentum is weakening and selling pressure is increasing. However, a new cross is now forming upwards from the bottom. This could be a positive signal that the selling has subsided and buyers are back in. If the MACD line breaks above the zero level, the bullish momentum will accelerate and the price will rise more volatile. Looking at the RSI indicator, we can see that a small downtrend has formed and is currently being broken. This is usually a positive signal that momentum is starting to shift to the upside and buyers are gaining strength. And it's doing a small retest now that it has broken the trend. And RSI breaking above the 50 level could be critical for further bullish strength. Looking at the Vortex indicator, we see that the blue line is trying to cross to the upper side. The vortex indicator indicates that if the blue line moves up, it is bullish, and if the red line moves up, it is bearish. At the moment, the upward movement of the blue line indicates that a potential uptrend could begin. If the blue line moves further upwards and overtakes the red line, this could signal the start of a strong uptrend. But we have to wait patiently and wait for the blue to move to the upside. The price is currently below the 200 EMA, but if the price breaks above the 200 EMA and stays there, this could be a strong, bullish signal. The 200 EMA is an important level that indicates the overall trend of an asset, and when the price crosses it, it usually indicates the start or strengthening of an uptrend. If the price settles above the 200 EMA, this would be a bullish signal for the long term. Let's take a more detailed look at the question of whether XCN can become $1. The reason we're using the XRP example here is that both coins are projects that focus on financial infrastructure and payment solutions. The similarity of these projects shows that there is great potential for XCN. In order for XCN to become $1, it needs to do 45x, which means it needs to increase approximately 45 times its current price. This would give XCN a market cap of $32.6 billion, which is well below XRP's market cap. For example, XRP's market cap is currently around $154 billion, and the coin has been around for so many years that even people who are not directly involved in the cryptocurrency world know about XRP. This shows that XRP has serious brand equity and is trusted by long-term investors. However, the important point here is that just because XCN is $1 does not mean that it is at the same level as XRP, because XRP is a big leader with years of experience and global recognition. Although XCN is a newer coin, it has a lower market cap than a major coin like XRP, and given its potential to provide financial solutions in the long term, a 45x increase seems like a very achievable goal. Therefore, even if XCN reaching $1 is not on par with XRP, it shows that XCN Coin has great potential and can significantly increase its market cap. If XCN continues to promote itself in the market with the right strategies and new developments, this 45x increase could be a realistic goal as long as the team works and develops the project. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will come. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.